Hello traders and Market Club members everywhere. Adam Hewison here. We're going to look at stock called Alibaba. We've talked about the stock before and also why we think it's doing what it's doing. It came out today. It has a new CEO. Daniel Zhang is the new CEO of Alibaba, and it also announced a big earnings beat which pushed the market up. Now what I want to share with you today is just how this stock is looking. A couple of things I've noticed. We've talked about, first of all, how this stock was sort of in a trading box like this, and it just dipped below that. You can see how it did that, but let me share with you what I think is happening. First of all, we have on our RSI indicator, we have, this is the biggest low previously right here, which is just here, and this is the new low, which we just dipped down here. So that is a convergence, bullish convergence. New lows on the price, but we didn't see it on the RSI. We're also above the 50 line on the RSI. The other thing I want to share with you is the fact that we have just broken over a perfect downtrend line. So there we are right here. This is a trend line that really began in November. So you've got 6 months, 7 months of information here, and look at how many times it's hit perfectly. And boom, through there today. So if we close at these levels or higher, so we're 85.49. I think the chances are we're going to see this market do a little bit better. It hasn't turned all the triangles green yet. Only one that's remaining is the monthly, and that's going to take a little bit more effort to do that. But certainly if we see the market go over 90, which is not that far away when you consider we are up dramatically today in Alibaba, that would probably turn the monthly green, which would be a definite go. I think Alibaba has a big future ahead of it, and I think the fact it's broken over this negative force line, this trend line right here, is going down. I think it's a very positive sign that this is the beginning, potential beginning of an up move in Alibaba in the e-commerce world. Let's move on. Looking at crude oil, crude oil actually was a little bit higher earlier, and then it sort of backed off a little bit, but we may have seen a temporary top here. We think potentially we can see this go to $70, but I think we may have to do a little more backing and filling. But generally speaking, all of our trade triangles are positive. You should be looking to buy this commodity on a dip. Certainly if we get down to the 50 line, that's where support will come in. But I think let's watch it for the next few days, but I think it's an opportunity to be a buyer and not a seller. But give it some room first of all. Looking at the NASDAQ now, remember we had a signal yesterday right here to be out of this market. It wasn't really that convincing because there's really no follow-through. We're sort of coming here, but we have to respect it. So you want to be neutral. 60 is a trading range, indicating you could see a pop-up here. It wouldn't really change things dramatically, as the monthly is still positive, but it's the weekly and the daily right now that are a little bit counter to that trend, and you want to be a little bit careful. But nonetheless, we think we'll see more two-way action and then probably another move up. Much the same with the S&P 500. You can see the weekly came in right here at 2,072. It's 2,088 right now, so it's actually higher, and the action there is very close to going back over the 50 line, but we have a 60. A score of 60 means it's a trading range, and you want to be very nimble on your trading style with this index right now. On the Dow, same pattern, 60. Yesterday was a big day. Again, very close to moving up, and I think potentially you have to look at the longer term trend, which is positive. It hasn't turned down yet, so don't give up on the bull market in the stocks right at this moment. Now gold, we talked about gold before and how it's in a sort of a broad trading range. Just we scoped that out in terms of the highs where we were and the lows. We got very close to that level today, around the 180 level, and it seems to be popping back up. But generally speaking, that's the lower end of the groove. But nonetheless, you have a weekly down right here, and you have a daily that's up. Even though the market's down, the daily is still up, the signal. So it's an 85 indicator, indicating that the chances are it should be slipping down. And we're also below the 50 line. That's the other negative on this market right now. Next market's the euro. We've been bullish on the euro. We've given you the reasons why. We pointed this out before, and that is you've got this, the double bottom right here, a double pivot point, so you just move that over there like that. So that's kind of like where you are, and we still have room to go on the upside. I think we're looking about probably about the 115 area on this, so we're not that far away, maybe 150 pips or so, but that's where we can see this going. That's the euro, and again the trend has been sort of up, little pullback, up, little pullback, and up, and we're just sort of in this sort of stationary stage right now, but very, very overbought. You can see where it went over the 50 line right here, and that was kind of like the start of everything, and that's around the 108 level. We kicked in at the 110 level in terms of our weekly, but nonetheless it is in a bull market right now, and you don't want to be shorting this market at the present time. There's no advantage to shorting this market right now. Hey, I'm Adam Hewison. Thanks for stopping by. I hope you want to take a look at Alibaba, see how it closes today, and it could be a great long-term trade. But if you really want to be conservative, wait for the monthly to kick in, and then you've got something really going with Alibaba. Thanks for stopping by, and thanks for watching this video. If you have any comments, please feel free to leave them below this post. Have a great trading day, everyone.